November's coming, my friend, and you better be ready for it. I am Dr. Stock, Doctor of Education, and even though the accent is fake, the catalysts are real. Enough with the fake accent. We got to get right down to business here. We need to look at the markets to see where they've been positioned on the charts and look at the economic catalysts coming up to see how they can impact us going forward from here, not for just next week, but through November, because it is going to be a really big and important month to us. And I think that we all want to know what exactly the market's going to do. And I think that I have some insight on what could possibly take place for us. So later through this video, I'll tell you how I'm playing it, and you can check out those buys and sells through the Patreon. That link is down in the description. My options course, I'm going to add more to it this weekend. I'm really excited about bringing the application side of things and then getting into the advanced trading strategies as well. And then also about the free stocks available from Moomoo that you can also find. In the meantime, we're going to kick things off by looking at trading economics to see what's coming up ahead. Dallas Fed manufacturing is first, and then employment cost. There's news on that coming up quarter over quarter. That's going to be something that tells us a little bit about inflationary pressures. So we're going to pay attention to that. Even bigger on Tuesday is consumer confidence, which comes out at 10 a.m. So if that drops, that can be something be a negative catalyst for us. Bigger than that, that is the first day of the Federal Reserve meeting, the next FOMC meeting that we had, the Federal Open Market Committee, coming up on that day. So Monday could be okay for us. A little bit of a bounce, a little bit of a reprieve, or maybe the pressures start as soon as Monday. So be watchful for that. Tuesday, a little bit scary, especially with consumer confidence, especially the first day of the FOMC meeting, but it still is possible that we see the markets sort of recover through there. Wednesday is the day that if red does show up for us, if it's not sooner than this, I think Wednesday is that day that we have not only the JOLTS job openings, which can be really positive. That can put upward pressure on the markets. Right now, it's expected to come in softer than it came in last month. We want to drop down below that 9 million mark for the number of openings. Or I should just say, we want lower job openings for pressure to come off the Fed for any further tightening, or since pretty much we don't think that there's going to be a lot of tightening that could happen, although we'll hear from Jerome on Wednesday as well at 2:30. So later in the day, those softer numbers are certainly going to help our case when it comes to that higher for longer scenario that they keep talking about, that keeps crushing down these markets over and over and over again, putting us into the predicament that we're currently in. So be on the lookout for those. The Fed interest rate decision, the market will probably depress from wherever it's at. Most likely it'll squish down leading up to 2 p.m. And then by the time that this comes around, we should start to see a little bit of recovery. And then Jerome Powell speaks. We could possibly see a further dip when he comes out and talks. So we want to be watchful for that. And then usually there's a recovery that follows. It really depends on what he has to say. The GDP numbers, not great for us for that higher for longer thing that keeps crushing the markets, which is weird because that's strong economic growth. And yet we're in an environment where strong GDP numbers are bad for the markets. And that's a weird place to be in. But that's where we are. We got to keep rolling with it for the time being. So that is something that, depending on what Jerome Powell says, that's going to be big for us. By the way, there's a consumer credit report that comes out from New York Fed on November the 7th. We want to be looking out for that because that can tell us a lot more about credit conditions going forward from here. So that's Wednesday, November 1st, that we have the Fed interest rate decision. So see if we get the rate hike right now. It's not expected that we have that. As a matter of fact, here we're looking at Wednesday, 97.5%, only 2.5% chance. They're actually saying 2.5% chance that we actually get a rate cut from where we're at right now. So that's incredible. But otherwise, pretty much guaranteed that we're going to see where we're at. So that's neat to see it actually dip down that way a little bit for us. That would be incredible if they actually said that we're going to come out and cut rates for this because credit conditions are too tight, we're putting too much strain on the economy. Then, I mean, we could really see that reflection take place in the markets, and it would be a strong bullish move, in my opinion, that the Fed starts cutting, because that already starts to put a chink in the armor of the Fed for their higher for longer case that they're already starting to cut rates this early in the game. I don't think it's going to happen, though. That's not what should get the majority of our attention right now. Just assume that we're not going to get a rate hike. Assume that we're not going to get a rate cut, that we're exactly where we're at right now. Moving on to Thursday, initial jobless claims and non-farm productivity quarter over quarter, factory orders, and then we get non-farm payrolls coming up on Friday, 8:30 a.m., and the unemployment rate report. Those are going to be huge. We absolutely want to watch those numbers when they come out. And non-farm payrolls, we want that to be a pretty darn low number for non-farm payrolls. Consensus 188. If it comes in much hotter than what's currently expected, that could be more downward pressure for us. So be on the lookout for that. And then we also get information about hourly wage earnings, basically this employment stuff like unit labor costs and everything. Those are more inflationary pressures if they come in higher, and that could be bad for us. As we look at these going forward, ISM services, we want to watch for that, see if we have expansion over 50 or contraction down below 50. And then Fed speech coming up. Moving on from there, we have, as we scroll down some more, Friday, November 10th, Michigan consumer sentiment. People are going to be watching that like a hawk. That at 11 a.m. has the ability to move markets. Now, I think this says 11 a.m. It's actually probably 10 a.m. I'm guessing that the reason for these time shifts of 1 hour is for daylight savings time, which hasn't come through and impacted this yet. So as you look at this, it says 11 after daylight savings time ends, I should say. When that ends, then this time should be just 10 a.m. market time with that daylight savings time in place. So be on the look for that. Tuesday, November the 14th, CPI comes out. Now this one, let me take it off the screen for just a second as I talk about it. So last CPI we got was not great. I said in a lot of my previous videos, going back as early as August, I said that the 3 months where we see a peak happen in inflation, August, September, October, and this coming up for us on Tuesday, November the 14th at 8:30 a.m. market time. And yes, I know it says 9:30. Daylight savings time affected the way it looks on the calendar, but trust me, it's 8:30. So as we look at that come out for that CPI, that's the October read that we get. So if CPI plays out like it has been doing historically, we should get a drop in December in CPI reads on a non-seasonally adjusted basis, or I should say a seasonally unadjusted basis when November's numbers come out in December. And I'll tell you what I think all this means as we go forward from here, but absolutely watch this because we don't know if we got the high in August or September. We don't know if then we start dropping back down in October, which can certainly happen to us. But out of those 3 months, the peak is always somewhere in there, historically speaking, going all the way back to the Great Recession that we saw back in 2008. So up until the pandemic, of course, and then things got a little bit crazy when the pandemic hit, but things are starting to settle back into old rhythms, at least as far as that part of it goes. So we do want to be on the lookout for that. Then most likely, if we do get a high read from this, that is the last high read that we get until February or March of next year, which is typically where we see that other high point happen in inflation numbers from the CPI on a seasonally unadjusted basis. So please keep that in mind when you see this. So moving on from CPI, we have PPI coming out at 8:30, not 9:30. Remember, daylight savings time coming out on Wednesday, November the 15th. Be on the lookout for that. And then moving on from there, retail sales can be a little bit of that, but there are bigger things to look at, such as we scroll down through here, November the 22nd, 2 p.m., not 3 like it says, is the FOMC minutes. People will be watching that. We can have downward pressure in the markets up until those minutes get released, maybe even a little bit after, but there's usually, depending on what the market looks like that day, especially if it's something that we were already up, near the minutes we start to drop down and then we start to recover after those minutes were read. So that's something that would be typical for those minutes being released. So that should also be something on your calendar as you look for it. Keep an eye on jobs numbers as they come out. Let me keep scrolling here. Wednesday, November the 29th, second estimate for GDP. Keep your fingers crossed for a downward revision in that. We want those GDP numbers not to come in super soft to the point where we're seeing 0, which that's very unlikely to see that, but seeing it come down closer to 4% or 3.5%, that would be a very strong catalyst, upward pressure on the market. So that is absolutely something that seeing could be very, very darn good for watching that come out at 8:30 a.m. in the markets. Again, daylight savings time. These will get adjusted after daylight savings time, by the way. So let me move on from there, and we cap off the month with personal income and outlays. This last report that we got, it was okay. Personal spending came out pretty darn hot. We want to see personal spending start to pull back a little bit. Again, trying to get out from under that higher for longer scenario that we're currently in. So let me wrap all of this thing up about the month of November coming up. We have the Fed meeting right at the beginning of it. We also have more jobs numbers coming out. So the Fed meeting, we want to know what Jerome Powell has to say about the outlook going from here forward. When we look at the jobs numbers, we want to start to see that loosening happen in the labor market. So please, that we can get out from under that higher for longer sooner. That would also be upward pressure on the markets. The inflation reports could smack us back down if October is our high point that we get. So we want to be watching for that one, especially with the way that fuel prices went throughout the month of October. It's going to be critical that we watch for those prices or for the inflation as it comes out, because that can be something that can really rattle the markets in the meantime. And then PPI being foretelling for what we see going forward from those producers being passed on to the consumers for CPI and PCE, capping off the month with the PCE inflation report. So just, it's a big month. It's going to be a hectic month. And I think that explains a lot, or adds commentary to what we're going to see in the charts when we look at the technical analysis for that. By the way, if you want to see how I am playing this market through the Patreon, that link is down in the description. You can go ahead, sign up there, and get into my Discord. I post my buys and sells over there, and my community's over there, and they're wonderful people. We'd absolutely love to have you as part of that. My options course is over there. Like I said, I'll be adding to that throughout this month and all throughout the month of November. I plan to finish things up for it. For applications, right now it's for the complete beginner, just perspectives on options themselves and what they are, how to use them, why to use them, all that kind of stuff, the risks that are involved. But I will be moving on to the application side as well as the advanced option strategies, finishing up October with them, and then also November finishing up my entire course with that. I do my options trading through the Moomoo app, and you can get up to 16 free stocks by using my link down in the description. $100 deposit or more gets you those free stocks. $100 deposit gets 5. $1,000 deposit gets 15 free stocks. Free share of SoFi. Their earnings are on Monday, the 30th, by the way, so make sure that you check that out. So let's go over to the charts now, because this is the part that we're all chomping at the bit to talk about, chomping at the bit to see, and we're looking at QQQ. And man, oh man, let's zoom in on this thing. So from my earlier video, when I talked about this thing, we can see that we are from the peak, we're down over 11% to yesterday. And if we adjust this to today's number for where we closed, let me click on this. There we go. I'll grab that and we'll move it up to that closing price. We're still almost 11% down from the peak. So we're officially in correction territory. We're down below the trend line. We're still up above the 200-day on this. 338.54 is where that we closed at for that 200-day. So not necessarily completely bearish yet, but certainly not looking good right now for the Qs. Apple reports their earning on November the 2nd. That's a different video, but I can tell you that is going to be absolutely critical for the NASDAQ 100, which is tracked by QQQ like we see right here. So keep an eye on those Apple earnings. I think it's one of the last big holdouts that we have as we look at that, besides NVIDIA coming up, which, by the way, NVIDIA, it might have enough time to have some further selling, and hopefully it does get squished down to the point that leaves us with incredible deals to find, pushes us down past any point where we don't have any doubts anymore whatsoever for NVIDIA that China's been priced in, the fact that they have headwinds there for being able to actually sell chips that they create or produce to China that they just can't benefit from in the same way because of the sanctions that have been put in place by the US government. So we want to keep an eye on for that. So November is just a big month. November is going to determine if we come down to this 200-day and break down through it. I think inflation is a huge part of that. Listening to the Fed is going to be a huge part of that. We need to just keep on watching what the market is doing around that time and understand that most likely the market is going to anticipate and fear and be uncertain. It's going to have push downs leading up to those moments. And depending on what those moments have to say, we can experience a really serious rubber band effect. I think December has a really strong possibility of showing us much more positive signs that we just didn't get to when we saw October's numbers for the most part in the inflation reports in November. I think when December tells November's numbers, we're going to start to get very pleased at the things that we see. By that point in time, we can experience quite a bit of a rally before seeing what January has to offer us, talking about December, at the very least in terms of inflation. So we're going to have to watch for that. And then labor market, that's still anybody's guess at just how tight that stays. So we'll keep our eyes on the prize, keep our eyes forward, and see what unfolds for those over time. And possibly maybe we start to see that loosening in the labor market sometime soon. Now, the Qs is up above the 200-day, but when we look at SPY, I said back here on Wednesday when we crossed down below the 200-day, that is a bearish thing, and most likely there'll be some further selling, and it's still possible that we come back, especially the fact that we tagged 410. I think 410 is very strong support for us. I think we go come back up and retest at least the bottom of the channel, but I think there's actually a really good chance that we have a short-term rally that brings us back up to the underside of the 200-day, which is currently at 420.62. So that is something we can come back towards it. And should we fail to get there and turn around, or should we come up and touch it but fail to cross it, then we could possibly see some further selling result from that. I think if we zoom out more, that down here, this point of confluence, I think is going to be huge for us. And that's right around, it's at 402 is about where I have it. But honestly, if it peekaboos down through that to 400 I think is going to be very, very solid support for us moving forward. I don't think at this point in time that we see 2022's mess where we broke down below 400 in the S&P. So I don't think the corporate earnings have been nearly bad enough to merit that much of a sell-off where we should see these bottoms again. But at least we know that should we go back and revisit those bottoms, we know the sort of thing that can result coming out of it, but we should come back even stronger than we did throughout 2023. So I think that even though we have those dark days now, those are the things that make the light really worthwhile as we watch them. So let me close this up. I'll give some final commentary on it. So the markets, November could be pretty darn messy for us, especially depending on what we see for inflation, especially what we hear from Jerome Powell, because they don't have a lot more to see report-wise prior to their meeting Tuesday and Wednesday of next week. So if he comes out, sounds super hawkish on us, we see some dark days maybe, especially if the inflation reports come in a little bit high for us throughout the month of November. I think when we see the inflation reports for November come out in December, I think that that's really where the clouds start to break apart and we see the sunshine start to break through. November could actually turn out really well, by the way. I don't mean to sound like I'm complete bear on November. I think there's a good possibility for further bearishness throughout the month of November. But as always, I will take a look at the charts. I will take a look at the technical indicators. I will see what they're telling us about the position that we're putting ourselves in. Let me put this back up real quick for you one more time. And then I really will wrap things up. I'll let you go, and I wish you to have a great weekend. If I zoom in on this, down here, when you look at the RSI, we have broken on a weekly basis. We have broken down below 50 on the RSI. The longer the time period is that you're choosing for each of these candles. So if I went out to a monthly chart, it would show us an even longer term trend. So going out to the weekly chart, this is a much longer term trend. Right now, down below 50, cross below, we are in bearish territory by a bunch of different measurements, breaking out of the channel, breaking down below the 50 week, breaking down below the 50 day, being below the 200 day. There are a lot of signs that we have that we're below that. This white line is very much historic support that we see coming through even a lot of the weeks of 2022, except for the worst one. We came down to that line and bounced off of it. So if we break down through this, it's probably not long until we come back and return to it, unless something serious happens, unless we find out that we're in some sort of big and serious recession happening. But should we see the indicators, such as the RSI, the momentum indicator, show us that the market is starting to turn around, when that happens, and that can happen in November, then I would be like, hey guys, the indicator's turning around. It looks like the market could really start to recover from here, or other indicators that we might have, such as other historic supports that we have in the charts, or important Fibonacci's that we would have on the charts. At those times, I'd be like, hey, this could really turn around. It looks like we're about bottom at where we're at right now, but we have to pay attention to the macro situation. We have to pay attention to the economic reports that come out, the geopolitical tensions that are out there. It's a big mess. Lots of fear. Off the chain for how much we've sold off so far, but we've seen in 2022 most recently that we can have a lot more pain before things start to turn around. November could be that darkest month in the near term. If it is, I think December shows us the light. If November shows us the light, good. I'll play that too. I think it'd be absolutely amazing to see that happen. And I'll be watching those reports come out. I will be listening to what the Fed says. And I will also watch the charts and see what's exactly happening to the market, how the market's reacting to it. And I will play that game right along with it. I will profit on the way down. I will profit on the way back up. I will be sharing those buys and sells over at the Discord. I will be talking with my community members. I'll be posting videos to the Patreon. Everything that I can do. Posting videos here on YouTube for you guys. Everything that I can do to take as much of an advantage with the changing market conditions as possible in these volatile times, building up my cash piles and dollar cost averaging into my favorite stocks. Thank you guys for watching this video. Let me know what you think down in the comments. Check out the Patreon. Come on over and join us. I think you'll absolutely love it. The community over there is absolutely 100% top notch. Don't forget about your free stocks from Moomoo. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.